Hey guys, welcome. It's the Market Sniper. That's right. And what are we going to be talking about today? Well, we're going to talk about the silver market. We did a video not so long ago called Short to Accumulate that said actually you want to put on a short on silver and that it's going to likely sell off to the downside. Yes, we said that. Oh my God, how can you be a precious metals sound money guy and tell people to short silver? Well, A, we're not telling you to short silver. None of this is entertainment. It's non-advisory. So A, we shorted it. Because we want to build profits to buy more bullion. Of course, sound money. Let the manipulators give me the money to buy more to shake the manipulators out. Why not? And why did we say it? Because technically we came to the conclusion that it's likely that silver would sell off. So let's go and have a look and show you the video first of all. So taking a look, here was the short to accumulate. Video, you can watch it there. That was done roughly 4 days ago, and we pivoted. We said this is not good price action. In actual fact, silver is likely to sell off. You can watch that full video and click from 4 days ago on the channel. It'll be somewhere below. In fact, it's probably the last video we did. Why and what actually happened. So we're going to go to the charts, but before I do that, do you like my jacket? It's a little bit non-standard for a jacket, wouldn't you say? Well, it's got shoulder pads and a spine pad and elbow pads on it. That's right. It's actually a biker's jacket to protect you from a bit of rough and tumble. And my suggestion is you're going to face a little bit of rough and tumble as a bullion fan on the downside, a little bit of heads over heels on the downside as you take a tumble to the downside. But it's all part of parcel of setting up the future upside. And in fact, it's also about the fact that I will be out riding all the way to Kariba, Vic Falls, and I'll be sharing on our channels a little bit of the bike tour stuff while also keeping an eye on the markets and doing updates like this along the way. If you want to be part of that, don't forget our Odyssey channel, link below. They will be made freely available for the updates on the tour side. General reset content will be in there, and also, as I say, I'll continue to do the Market Sniper stuff over here, but it will be in the field of the two-wheeled sand of Zimbabwe, Botswana, and the beautiful waters. We'll be on a riverboat on Kariba where you can fish, and we'll go for rides from there. It's going to be awesome, and we'll have our mystery guest who is arriving in, Oliver Tambo, formerly Jan Smuts, within a couple of hours as well. Also a precious metals man. Okay, without further ado, let's have a look at that chart and what's actually happened with silver. But so here's the chart. You will remember the arguments we made in the other video. Just a short recap. This essentially was a big up move that went all the way to the 26. We've identified the 26 as quite an interesting level. You actually had a little double top at the 26. We call it an M head, and of course that performed to the downside going here. And our overall technical opinion is that this was becoming what we describe as a slap in the face, because the resultant rally was rather short up, short down. And then the next one was equally shorter to the upside and faster to the down, and we expected a short rally here. We were very lucky to get filled on a wick on this silver rally. I put a limit order roughly where this orange line is over here, and we were filled, and that is an early entry with the stop over there. And I will show that on the charts. Because we get doubting Thomases. We don't, we aren't always right. We don't always nail it. But in this instance, I think we've done okay. This was the basing ascending grind line. Normally we do it in TG pink. So let's correct that. And there is the grind break. Now you could have. This is a very interesting piece of price behavior that happened here. But you saw a rally. At one point, this was all green. I saw it and I thought, oh, there we go. Never mind, stand to your process. Looks like you're going to get stopped out. This was 100% a green candle. It would have looked like that. This is how the markets shake you out, friends. Do not watch your trades. I only saw it for a short bit in between being busy. That was 100% green candle there. Imagine being short and being a precious metals fan, being short to make money and watching it doing what you want to see it do, and you're trading against it. Well, that's the psychology you have to get comfortable with. It didn't feel very comfortable. I had a brief look at it. I had my stop in. Of course, we put our stop and our targets all at the same time. And essentially, this is the trade that I'm in with that risk. And in actual fact, I can bring that stop down from there now and put it at the top of that rejection candle. We call that candle a fake and break candle. So this is an example of some of the things you will learn in our content. And I don't often do this because a lot of people think, you know, we're just a Telegram group or a WhatsApp group or a Slack group or a Discord, you know, and, you know, it's an expensive Discord group. Here's the key content where we actually describe it in our premium environment, which is pre-recorded to an immaculately high standard with a massive great pearl, with headset speakers for the best audio, with true annotated slides on how things turn. No, that's our update from today. That's not what I was going to show you. This is the recorded content. So we talk about triggering events. Triggering events for a setup. And there are actually a number of ways the market triggers. And you can see this was a triggering event for the short. In fact, I'm going to put it on the daily. Most people look at the daily, then you will recognize and see it in one candle. Here is the candle that gives heart attacks when you are short, and then suddenly gives you everything back. It's a look one way, go the other way candle, and that point being crossed there was the confirmation of the trigger. But in actual fact, these candles we know as the fake and break candle. In other words, it fakes up and smashes down. In other words, it's like, not quite the same, but it's like a shooting star in a bear case, and in a bull case, it's like a hammer. Only difference is the bodies aren't small. You can see this actually has quite a substantial body. You could get away with calling that of shooting star structure, but it's not at a localized high. It's not here or there. So remember, in candles, it's the context of where you appear that also matters. You can't just have the candle look like a shooting star. That's not actually a shooting star. That's a range testing because it's not at the localized high. Neither is that. Also, the body here is a bit longer. So let's see and show you, for those of you who will be joining our community and wanting to understand how we do what we do to a much better standard and want to see a small snippet of the premium content, let's hear me explain the fake and break candle. For you, if you arrive late, we've got a third type that we have to cover, and here she comes. Okay, triggering event. It's a very testing type, and if you're watching it live, you can panic, especially with HVFs. The Hunt volatility funnel setup, we often end up in situations where the one key thing we're not too sure about is sometimes if we're wrong, we're 180 degrees wrong, and it's directional. Rarely are we wrong about a volatility squeeze. It's plain to see. Yes, we might miss our draw slightly, but if something's squeezing over 3 impulses, you tend to notice it, okay? So you're getting to the scene of the crime, and instead you're shooting the victim instead of the criminal who's just lurking there and about to get away. So you're close, you're arriving there, you're getting good, you're getting to the key moments, but you're still not quite getting it 100% right, and you're doing more damage. So remember, getting the direction right is pretty important. So if you get a candle that looks one way and then goes the other way, it does make you sweat it a little bit. So I'm going to go with, let's say again, we're on our trigger time frame view. You're on RH3 and RL3. So stop placement is just below the purple arrow, and buy longs is here. You might have some drifting spinning tops in the funnel, and then it looks like it's going to drift down. It trades really low. It gets to your key level of significance, and all it wanted to do is sprint to one side of the room, push off the wall, and come herring into the other direction. So it's gaining a bit of momentum, bouncing off the side, kind of like that WrestleMania. Who knows? Vince McMahon and his boys, bouncing off the ropes to get the momentum to go hammering down the other end. And that's exactly what happens. So you tend to have a very big wick on these candles. So the overall range is, again, vast in comparison to what came before. You're in a volatility squeezing event, everything is getting compressed, now things get violent and they start thrashing around. And this is the beginning of the move, and first the one way, run the other way, or vice versa in our bear scenario, where you test to the upside and you establish that's it, I can go no higher, and you push off it for legging it to the downside. So in both instances, you have a bullish upside, look one way, go the other way candle, and you have a bearish one that are breaking. So it's kind of like a fake out in terms of the move. This can also happen
happen on very news-derived events. Some people will, initially the news might break and the headline goes, and then people...
Big week of Fed previously, and then a Sunday, a rally, and then a Sunday session. News intensive period. Very, very panicky form of triggering event, because first it makes you feel that you're wrong and it's breaking the other way. Requires true resolve to stand on your stop loss.
Read into that and they go, clickbait, that's actually supportive, it's not negative. What do you mean do that? Never mind, flick and go. So in other words, the market wanted to go up anyway. It looks like it's something slightly bearish, but then it's shrugged off entirely. It has a little bit of a reaction to the news and it goes. So news events, remember, fundamentals and technicals are the same coin. Often when you're waiting for your setup, make sure you're aware if there's anything big fundamentally that's about to go down.
That is a small snippet from our triggering event types that is introducing to you the fake and reverse candle as triggering events, often associated technically with big news, heavy news weeks. The market wanted to go down, got something positive, kind of went up, fully exhausted, absolutely rejected, all the way back down to here and broke. You were looking at the very example of a fake and break candle that rallied to the upside as a fake out, made the shorters feel they were wrong, then reversed violently, and actually is a very good triggering event once you have triggered, because it is a pre-exhaustive event for bulls. It absolutely ball breaks the bulls in that situation and usually leads to very, very good performance. As a first inverted HVF in a new trend, we also expect it to potentially have the wild card of further overperformance depending on the circumstances. We have an overperformance methodology. I was showing you some content from our basic beginner first of 3 modules talking about triggering events. You just saw right now the exact example of what I was describing occurring, and the features that we mentioned in terms of intensive news events. Strong Fed week just prior, market then thinks, oh, okay, dollar's having a rest, time for silver to go up. It's a fake out. The dollar is now firming up again, but more importantly, the exhaustion on the silver bulls chasing up as leverage traders here is complete, and hence why you've had excellent follow through here since that key candle, that key daily candle has delivered absolutely the final exhaustion, and it sets up great overperformance potential to both target. Where is the target? It's sub 20. It's sub 20, the target, and as I've said, it can go beyond. It can go beyond. So we are short, and we will be turning those profits into fresh bullion to undermine the likes of all the manipulators in what is going. But this is a warning. And it's also interesting to state that at the same time, and we'll be covering this on a crypto channel, funny enough, Bitcoin went up. So there's been a divergence between the anti-fiat generally. Let's go and have a look at what that's done to our gold and silver ratio. But I just wanted to share that break with you. As we saw it develop, we warned that. I gave my levels to the premium community where I was putting in, and I was actually filled on that wick. I'll tweet out the chart later for the doubting Thomases. But the key element is its downside, and this is a serious downside, and it typically leads to good performance, but it is one of the hardest to sit in. Luckily, I wasn't watching too much. A, with the entry, and B, with the rally. But I did see that it was rallying at the time, and I thought, wow, you know, and every time you get that feeling, oh, looks like I may be wrong again. It's zipping and zapping one more time. No. It is that key triggering event candle. Okay, so let's go and have a look at the other aspects surrounding precious metals, which would be the gold-silver ratio, which is right here. What has that done for the gold-silver ratio? Well, slamming the silver like that has taken this down, and then massive reversal. You can see what was. This is slightly more hammer-esque. That's still quite a big body, but the wick is so large it's acceptable to refer to it as a hammer, because the body is still only around a quarter of the entire length of the wick. So the extremity of the wick probably lets you get away with a hammer. Like I said, I wouldn't quite call it a shooting star on the silver chart, but it's quite a big body. It's quite typical of other bodies, but the scale of the wick keeps it honest in terms of hammer. This is more typical hammering and body to wick size. So I would still say it's a little bit on the big body side. It's a rejection candle generally of the lows. And now we are seeing that in actual fact, the gold silver ratio is going to visit this top, which has kind of been a little bit resistance here. It is smashing it, assuming this candle doesn't wick and come back down. It is smashing certainly the descending grind line, the capping descending grind line. However, we have these levels in and around the 87 and the 85 range, which have been resistant. So that box over here has been very resistant to any upside. So for the silver to trade down to the sub 20 level, in my opinion, it's quite likely that you will see this 87 beaten to the upside. So what is gold doing? The God market, our hero amidst all of this, well, unfortunately, it has been spilling too. It has been spilling too, but just proportionately less so. And again, we highlight that basing ascending grind and that squeezy Japanesey, and you have a smaller time frame inverted, but of course the higher beta of silver is the more attractive trade. The higher beta of silver is the more attractive trade. So let's just clarify what we mean by that. The fact that silver swings around more and will have a higher percentage of move is the more attractive trade. You can see this, and there you go down there. You could have funneled there and you would have been short there, and that would have been your triggering event, and that's your stop loss event, and so you are on your way. And that would have been, by the way, 1914 at the latest. You would have been in your trading 1834. So you also got the fours there. It's $80 down, an $80 trade even on gold. Not bad performance had you taken it. And again, not looking great for metals. So metals now underperforming as an anti-fiat, because possibly of the monetization, because possibly of interest rates rising, the perception of future interest rates rising or not coming down as fast, not the peak. The expectations for the pivot keep moving further out and a little higher and a little longer and coming down a little softer until, of course, everything breaks, of course. So all the pivot callers, there was a massive theme of everyone with the word pivot, 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 pivot. All I heard was pivot. All the pivot callers, and I said, don't call a top on this. Don't call a top. The bond market has to devalue immensely, which means you're likely to get an interest rate spike at some point. People that call tops and are wanting to buy bonds and wear diamonds are going to get it. So now, as the models are readjusting for higher for longer, truly, and the people are starting to believe the Fed, what you potentially are getting is the fact that there's no yield paid on metals, and in fact it has a cost of custody associated to it. So it's a minor negative yield if you're doing it on a big scale and not keeping it at home, for example. And as a result of that, as we close the gap to the real inflation rate, I will argue the real inflation rate is a lot higher than the BLS stats version, and you're still on bonds getting a negative real yield. But in terms of the actual statistics of inflation, they are already telling you you're getting a positive yield. Okay, so that's your update on precious metals. Downside first, a little bit of softness. We're expecting silver sub 20. I'm going to go back to that silver chart one more time and also highlight on the bigger time frames that the significance of trading below the 20 is the following. Because if I show you the larger draw, we had over here around the 22, a level that many thought, and for a while we thought as well, whilst we were building, that would stand, that dotted blue line. You can see how many times we supported here. Let's get that up to 3-day so we can show you a little bit better the quality of the candles and decompress all that price behavior so you can see it. Note how this had been a localized soft floor. It was broken for the possible head that we had for the left shoulder head and all of that. That structure might now be under threat as a possibility, because it's likely we run this low on target performance. So what does that mean? The 22 kind of supported there, kind of supported. This entire structure was actually a winding up structure to smash through a recognized, known and well supported soft floor once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. When you broke it, you rallied back up to it. Typical behavior. You broke it with momentum, rallied back up to it. When you came back above it, you rallied through it and pulled back and broke it with momentum again. And so you broke with momentum both on the down and the up. Look, the little shooting star for the run and the pullback. And then you support. This is soft support. Remember, think of it zonally on the basing ascending grind line. This entire process is a winding up process to smash your way through the soft floor, which is likely to bring you to these kind of levels. How much overperformance will you get is a question that I cannot answer. But overall, we are going lower in the silver. We are trading short with view of turning profits into bullion. Hope you enjoyed this update on the precious metals markets. See us on our bike tour, where we'll talk to you. We will be visiting the burial place of Cecil John Rhodes in Zimbabwe, all likelihood. We'll potential updates in Cape Town. We'll be talking precious metals. We'll be talking energies. We'll be talking a lot of things. Real possible risk that there could be a bit of demand destroying events occurring as we go into this period, with all the models being re-rated for higher rates for longer, and the effect that is having on the precious metals market, which for now hasn't trickled through to Bitcoin, but we will see. Okay, I'll be updating on the crypto sniper as well during this period. Thanks for watching. We'll catch you later. Remember, click that first link below in the description, book a call, talk to someone friendly, watch us implement real theory in the markets, theory that you will have presented to you to an exceptionally high standard. We take great pride in passing on the skill sets to you for your personal use to build wealth in reset season. Makes sense to me. Does it make sense to you? Hopefully it does. Bye for now.